Hello everyone, I'm James and welcome to Thursday Technicals, and this is a 5 to 8 minute video every Thursday just updating you on what's going on technically on the charts. We cover the fundamentals in our live streams on Wednesdays and on Sundays, so why not join us there if you want to find out more in depth about the market fundies. Let's have a look at the charts. So I'm just going to look at key levels here on the various markets that we trade and point out a few things as we go along. It's not meant to be an in-depth market analysis, but just to guide you sort of midweek. And I'd also refer you back to yesterday's video. That's on this channel, and that's a live stream with me and Paul that we held yesterday and talked about all sorts of things, including crypto. So go and check that out too. Right, so on the currencies, basically what's happening is the dollar is moving down as we expected it would. We sold off at the 200 period moving average there at the top of Dixie Moab, the orange range, and we're moving down. Now, we did try and reclaim that level once, double topped it over there, getting through the 200, but breaking down subsequently through the 20 and the 50, the red line, still held up by the 100 below us. I think we've got something like this on our hands, a large megaphone pattern. I wouldn't be surprised if the dollar headed down towards the bottom. We'll have to shift that along more towards the question mark, actually, as time progresses, as we might have to move this arrow a little bit along. Something like that, perhaps, and maybe that's more accurate. But somewhere down at the bottom of the megaphone could take us down to about 94 on the dollar index, the Dixie. We're currently trading at 99, so about 5% down, which should see about a 5% rally in the euro and the pound, the Aussie dollar, etc., and perhaps a drop-off in the dollar yen. There's a lot of talk about the carry trade unwind and bonds in Japan and the US, and interest rate hikes in Japan upsetting the apple cart, so to speak. And we don't want to see a massive sell-off on the dollar yen because that has the potential to really drag the US markets down, including crypto and the equities and things like gold too, as capital might flow out back into Japanese assets and the yen as it becomes more attractive with interest rates. Nevertheless, we're short at the top there, and we have a very small sort of unhedged position down here, insignificant really. But these are our two key positions on the dollar yen, looking for a move down to the channel center line, 50-day moving average, and then the channel bottom, the 200-day moving average, as that curls up. And by the time we get there, and that will be the point that we'll have to decide which way this is going to go. Is it going to be a bear flag, or is it going to just carry on moving up from the channel bottom? We're also long on the Aussie dollar, great breakout here, commodity currency with lots of potential because of the price rise in commodities in general, and more set to come, I believe. So we've broken out of this long trend line now for the second time. You might say, well, it's not an accurate trend line because we sort of poked through there, but this trend line goes back a very, very long way, all the way back to February 2021, and we touched it once, twice, 3 times. The 4th time poked through it, but we've now tried subsequent to that one more time, didn't get through, and we're trying again. So pretty good. Top Bollinger Band here at the previous swing high, first target, and then of course if we can break through there, the green line. Mark those levels on your own charts. That's currencies. Let's move on to stocks. Still long and strong in the NASDAQ. You can go and check out previous videos on the reasons why. So and make sure to join us on Wednesday and Sundays. The next Sunday video is coming up in a couple of days' time, so I'll see you there, hopefully. And I explain all of the reasons why, but we're holding this level. We've broken above the trend line. We've broken and held above the 20 and the 50 confluence, which is excellent news. And of course, that black line, the previous swing high, and potential head and shoulders, which everyone is looking at saying, we're going down, boys and girls, we're going down. Head and shoulders in the making. Never assume a head and shoulders in the making. They really work out. And when they do work out, it's always too late to get into the move because the neck or shoulder line has been broken already. I don't like that pattern very much myself. Same on the S&P, moving up. Not too much to say about any of these. German 30, very entertaining to see MSTR bouncing out, forming a fantastic abandoned baby reversal pattern. This is the 4-hour chart, reclaiming that purple line within the day, which was excellent. Amidst all the bad news, and often when the news is the worst, the markets perform the best, and that's what MSTR did. Bouncing out of there, we got long right at the bottom, and we're moving up. We have other positions higher up. I don't even want to talk about them. They're not too far above, well, they're quite a long way above us. Not too large, but significant. My full allocation, and we're hoping that this will move up. I'm pretty sure it will. I'm also long on Tesla, Coinbase, Nvidia, my favorite 4 at the moment. Looking to get long on Google. I'm also long on the German 30. Right, going across to Bitcoin, nothing much to say apart from what I said in the videos yesterday and on Sunday, and what Paul was talking about in the live stream. I believe that we've come down to the 78.6% Fibonacci here on this chart. We've bounced out of the channel bottom. Let's have a zoom in, and performed a higher low and a higher high now, and we've closed higher, so it's done. Got above the 20 period moving average for the first time since the October flush out. which continued and continued and continued as market manipulation was driving the prices down in order to facilitate the grabbing of more Bitcoin by big players. They seem to have done a good job. So I'm long on Bitcoin, long on Ethereum, breaking out through the trend line, looking good. These are all pretty tentative, folks. We've got to get above all the moving averages and close subsequently higher on a weekly basis. And so each weekly close becomes important now. We want the weekly candles to be bullish. What happens intraday is just been incredibly horrible and messy. And so we want to see weekly candles making higher highs and higher lows and moving up, not down. We haven't seen that yet. XRP, same sort of thing, higher low, but no higher high. And on Solana, we have now closed with a higher high yesterday than the previous high. So we've got that sort of pattern going on there, all looking quite good. I'm very bullish. Now on gold, I'm still short on gold and hedged on my long silver trade. Gold is ticking down a bit, not making progress. We've got the 78.6 fib above us, which is holding us down. And that's the level where I think we may remain held down. We're below the trend line. We could retest the trend line from underneath and still make a new high and still be bearish. We could get above that swing high under the trend line, still be bearish and move down. My targets are down here at the red line, the red trend line, a very prominent and important red trend line. And then, of course, we've also got the big breakout triangle down here at 3,500 and the 200 period moving average simple moving up underneath us. I think the most likely target is, in order to make a higher monthly high, is probably down here at about 3,800-ish for a bounce out of there. I'm now short on that one, but I'm also long, have been long, now hedged on silver. I think this may have reached a top now, but I've locked in the profit about $9 from 50 to 59, and I haven't decided what to do. I'll be informed by gold on this trade, and if gold starts moving down, I'll unhedge my silver trade and probably just leave that one, wait for gold to move down and reverse, and then get long on silver thereafter. Going across to natural gas, we talked about this yesterday, actually, in the video, in the live stream, quite extensively. The last 4 hour candle, we were trying to move down. So basically, we're trying to top. I don't want to go through all the reasons for all of this in this video because it's meant to be a short, quick update. But we try to get short here at the obvious level, and for various reasons. But I think that we may now have to reach the top. This last 4 hour, this is a 4 hour chart. This last 4 hour candle reversed any downward move that we had from that little swing high. I'm still hedged, but I think we might follow this path up to the top of the channel and then down to the bottom of the channel again. Let's just reset this trend scale. Up to the top of the channel and then down to the bottom of the channel. I've drawn this a little deeper. It doesn't have to be that deep, but maybe just to the bottom of the channel or down to the point of control. That probably looks like more likely to occur, something like that. And then I think we could get a lot lower. I'm not sure how far, but I think $3.75 or $4 is my first objective. And once we get into that zone or region, remembering that 375 is really important. Also notice that we've got stochastic and RSI divergence. I'm not going to put that up right now, but you can put up the 14 period RSI or the 1473 stochastic on your chart on the day and on the 4 hour chart. You can have a look and see where those are overbought with divergence. I'm also short on WTI, looking for this to move down. Fiddling and faffing around. It's going to get slower and slower as we get cheaper and cheaper and more buying interest comes in. But I still think we have an opportunity to probe the $50 level, perhaps slightly below. Still short on that one. And now long on uranium and lithium. Again, I've talked about these in extenso in the last videos. But we're slightly, perhaps now back in the money on uranium. I think we could go a lot higher. I keep on pointing out this weekly chart. If you want to know what the potential for uranium is, URA, this ETF, there's the chart. No interest in uranium for decades, almost a decade. And then suddenly everyone wants uranium. We broke out, we've got going, and we've got a long way to go. We got long at the bottom initially there, and I'm now looking to get, well, I'm long already from here. But we may have to get a little bit deeper. Let's go back to the day chart quickly on uranium, URA, and see how far we could get down. There's the 200, and there's a swing low, and a tiny gap down below in that region. And it is possible that we may need to get down below 40, down to about 38 on URA. Nevertheless, I'm long already. Same on lithium, long on lithium, and this has got plenty of potential too. If you look at this on the weekly chart, I don't know if this one goes back far enough. It does. We can get a lot higher before we even got to the all-time high on lithium. So I'm long on that one, just above the 200, and this is the weekly chart. 200 week and 20 week moving average confluence. Beautiful. And we may have to test that. Bear that in mind. And that's at $54.20. We're currently trading at 63. So both lithium and uranium have potential to pull back, but Whether they will or won't, I don't know. I suspect that there won't be any pullbacks, and if you didn't get long somewhere down below, you may have been locked out by now. Now, softs and grains, very little to say about this. I'm still short on coffee, hoping for this to move down. No other plays really of much interest. Short on coffee. We're going to either move up or down. I'm choosing the downside. And once we get down to that black line, I think we could go a lot further. Probably a bounce, big bounce, and then a continuation down back into the normal range and proper levels for coffee. I've also got a long on sugar from that level down there. You can check out the sugar chart and nothing much else. Cotton, we have a long on cotton too. Yes. Thanks for reminding me. Invisible person. A long on cotton down at the bottom of this range. I just think this looks good for a move up. Something like this, a big short squeeze on cotton wouldn't go amiss. And we're still pretty cheap and still opportunity to buy here really, even though it's higher than where we got in. That's cotton. Soya we got out. We took profits on the longs, and wheat we took profit on the longs. May look to get back into those at some point. And then finally, just a couple of points of interest. The ZAR. People keep on saying, what's going on with this one? Why is it not getting off the bottom? And I suspect it's got to do with minerals deals with who knows who, Russia, America, China, Iran, all snooping around for rare earth and oil and gas in our country and neighboring countries. So that's been supportive of the rand, unusually so. I still think this is due a massive short squeeze. And if you look at this really, if you're a technician like I am, you'll be observing this very interesting falling wedge here on the rand. I haven't drawn it perfectly, but it's something like that, meaning that we could go a little bit further down before we test the bottom of the wedge again and bounce out. I hope not, because I've got some longs on this one from there, over there and over here. Very small, but I'd like these to get going, and I've got space to add if I can. Might have to add on strength. And then on Bitcoin Gold, bouncing out of there beautifully. Just to reiterate this chart, if you want to look at this chart in detail, go and check out yesterday's video and Paul's crypto video from Tuesday. This is the weekly chart on Bitcoin Gold, and we've made a case that this may bounce out of here and start the next leg up. In fact, 2025 was a down year and not an up year when you compare Bitcoin to gold. And this is the weekly chart making a weekly tweezer at the 300-week moving average. It's just one that everyone uses, and it fits. It's a bit of curve fitting, fair enough, but let's go with it for now. Bouncing out of the 300 with a tweezer bottom and a big bullish candle this week. That's what we want to see on Bitcoin versus the dollar. And I'll finish off with this. This is the daily chart, and we want to see a weekly candle very similar to the one that we just seen on Bitcoin Gold. And are we going to get it? Yes, we are. But we still have a lower low on this weekly chart, even though we have a higher high. It's an outside candle, which is a hesitation candle. It's not convincing by any means, but if anything, it leans to the bullish side. Folks, make sure to subscribe, like the channel, click on the links below. There's some giveaways and offers that we've got on running at the moment. And make sure to check out the crypto videos dropping tomorrow by Paul, and join me on Sunday for Sunday Live here on this channel. Go and subscribe, register, make sure you get the notifications. Take care.